in what could be touted as one of the most historic deals within the Indian retail space. We finally have some clarity and an official announcement from Future Group and Reliance Retail. Talking about the deal contours and the math associated with it. First up, what we understand is that Future Enterprises at its board meet on Saturday consolidated all of its listed entities: Future Retail, Future Lifestyle, Future Consumer, Future Market Networks and Future Supply Chain. So all of these have been brought under Future Enterprise Limited via share swap deal of the various entities. This essentially is on the basis of the closing market cap that we saw on Friday, and it does not factor in the debt which will also be acquired. So that's something that investors and market watchers need to be careful about and digest eventually when the markets open. But yeah, as far as the deal is concerned, Reliance Retail will be buying the retail and wholesale business and the logistics and warehousing business from Future Group. This will be on a slump sale basis for a total consideration of 24,713 crores. FEL by way of slump sale will be hiving off retail and wholesale business to Reliance Retail and Fashion Limited. This includes key formats like Big Bazaar, Easy Day, Food Hall, Central, Brand Factory, etc. And Future Enterprises will also be selling off the logistics and warehousing business, like I said, to the holding company, which is Reliance Retail Ventures. Now, Reliance Retail will be taking on certain borrowings and current liabilities related to the business and discharge the balance consideration by way of cash. What stays back with Future Enterprises? Post the transaction, FEL will house essentially the manufacturing and distribution business of the FMCG goods and the integrated fashion sourcing as well as manufacturing business. Not only that, but they will also retain the insurance JVs that they have with Generali as well as with NTC Mills. Now, interestingly, Reliance Retail is also said to buy stake in the remaining entity. They will be, as part of this transaction, investing 1,200 crores in preferential issue of shares in Future Enterprises, which is the residual entity, for additional stake of 6.09%. They will also invest 400 crores in warrants convertible into equity shares for an additional 7.05% stake. So essentially, by the time the deal is over, Reliance could own anywhere between 6.09% to 13.14% of FEL, depending on additional contribution to warrants. So this is what the deal looks like, and what we can understand is in the near term, it will not be the owner of Future Enterprises, and Future Enterprises will have to use the proceeds from the transaction that we talked about in order to settle their liabilities. This comes as a huge relief for Kishore Biyani, who's been grappling with debt related stress for many quarters now. They have a loan worth 15,000 crores to banks. Promoter pledge, of course, is not made public, but it's close to 7,000 odd crore rupees. So definitely good news coming in for their lenders as well. And for Reliance, they have a huge ecosystem to work with, which Kishore Biyani has created over the last many decades. They have access to 18,000 stores across the country, an ecosystem and very strong synergies to work with. So let's see what exactly will be the next plan and the next big announcement. Nothing about Amazon has been talked about, interestingly. So let's see how this plays out.